Ellen, the Fed's preferred inflation gauge, that PCE, out this Thursday, how just important is it to the overall narrative for the Fed's timeline, whether it be to cut, and if so, when?
So, look, it's extremely important. Now, do we have a good handle on what we're expecting? Does the Fed have a good handle? Yes, because all of the indicators that go into the number that we're going to get on Thursday pointed to that reacceleration in the first quarter. Now, we've been expecting a reacceleration in core inflation this quarter, and that has underpinned our longstanding view that the Fed would hold off until June to cut rates. But I think for many market participants, that came as a surprise. And on the back of all the January inflation data coming in, we've seen a significant repricing of that expectation in markets. But we do expect inflation reacceleration to be temporary, but that is an open question. In fact, folks are now leaning toward, will the Fed have to wait even longer beyond June in order to cut? And I tie that back in to Steve's point about the NABE Outlook survey, where the downside risk was noted as the Fed remaining too tight for too long. And we're sort of on the precipice here of, do they do that? Or do they go ahead and feel comfortable to start easing policy this year?
Now, what's interesting here is I want to bring in something that J.P. Morgan Chase CEO Jamie Dimon just spoke about in the past hour or so on the halftime report. He was sitting down with our Leslie Picker at a trade conference down in Florida about just what the recession context he's putting around the story is right now. I'd like to bring that in.
70 or 80% chance we'll have a soft landing. I give it half that. We may very well have one, but I think there was also a higher chance in the market thinks of rates being a little bit higher. The other thing I think it's always a mistake to do is look at just the year. All these factors we talk about, QT, fiscal spending, deficits, the geopolitics, those things may play out over multiple years. But they will play out and they will have an effect, and we just don't know what they are. So I'm just, in my mind, I'm kind of cautious about everything.
Ellen, this is no surprise. Jamie Dimon, over the course of his career, has always been a more cautious bank CEO. It was maybe just almost a couple of years ago when he talked about that so-called economic hurricane that they were preparing for. This is a story that has largely not played out, but the inflation story seemed to turn a couple weeks ago just because of a pretty decently sized, outsized inflation print. It's maybe one of only two that's really set things higher. Is that really a trend that policymakers need to take note of? Or to your point, is the real risk keeping rates too high for too long?
Well, I think it's too early for policymakers to say this is a new trend, but it's not too early for them to say, you see, we're vindicated. We didn't want to declare victory yet. We said we needed more evidence. And the fact that inflation reaccelerated in January supports that patience, if you will. I feel strongly there is nothing being debated on the Fed right now seriously as to whether the next move needs to be up. So I think we can set that concern aside, but it's still about how long do they hold. Now, something that Jamie said, I think, rings true in that whatever kind of landing you might be thinking about, right, it's about timing. So we've had a soft landing call since March of 2022, and I rolled that forward into 2023. Guess what? I've rolled that forward into 2024. We will have a hard landing at some point. I guarantee you that. We're all wondering, when does that come? And I just don't see anything, and this is probably the same way the Fed sees it, in the current data, coincident data on the economy, or the forward-looking data that says we should be on recession watch right now. But the point that Dimon makes is that there are these cumulative impacts that build over time. And we are in the camp that we haven't yet seen all of the tightening impacts from monetary policy flow through. And so it should keep you nervous, right? Economists were supposed to worry about what evils lurk around the corner. And so I'm not on recession watch right now, but I do understand the tremendous unknowns that are building in terms of tighter lending conditions, past monetary policy tightening, quantitative tightening, geopolitical events. I mean, they're stacking here, but we're still wondering, when does that soft landing turn into a hard landing?